In this video, we're going to talk about wealth building strategies to help you become wealthy. There are so many wealth building strategies out there, whether it's stock market, on the crypto side, real estate. There's a vast array of investment strategies that can help you be wealthy. And in this video, I'm going to talk about what business strategy, what wealth building strategy is right for you and how to pick the right one. So stick around. So there are so many strategies out there to become wealthy, and we all hear stories of the person that bought a commercial building in downtown and then there was put some tenants in place, did some minor renovations, and then ended up selling it for double what she paid for a year or maybe 2 years later. We also hear about this investor that bought an apartment building in Memphis, Tennessee, who basically renovated the apartments and the whole apartment in each unit and was able to almost double the NOI and sell it for huge profit. Wait, that's me. So anyway, there's all these stories out there about wealth building strategies that worked. And the question is, what strategy works for you? This is what's really important. Because we never hear of the guy that bought a couple of apartment buildings or is buying a single family rental every year, buys, and now he has 30 single family rentals, and each rental is making $3,000 in net cash flow a year. Well, we don't hear about these stories, and he's financially independent. He doesn't have to work for a living. He travels around the world, and we don't hear about these stories because they're boring. People want excitement and they're looking for stories that they're looking for. And excitement always comes from, big win, big profit in a short period of time. But boring is good. It's a long-term strategy. It's low risk. Embrace boredom. When you look at all the strategies I mentioned earlier about crypto, stock market, commercial real estate, residential real estate, flipping, wholesaling, there's a variety of them. And there's other ones out there that, I probably don't even know about. There's also the business in general, creating a business, a restaurant, etc. So all these things could be very successful strategies. Selecting these strategies is really dependent on you. And really what I mean by that is dependent on your resources, the time, capital you have available, as well as your capabilities. That means the skills that you personally have or the skills that you can have somebody else bring on to the team. So bringing a partner or something like that to add to your team and then be successful that way. Some examples that are a little bit outside the possibility for most people is opening a restaurant. Opening a restaurant, there are people that are very successful within the restaurant business. They're very successful. They make a lot of money. They make it also being passive because they have a team in place that do that. But they have some skills to get that done. They know what it takes to find a good location. They know what it takes to fund the deal the right way. They know what it takes to create a menu, to hire the staff, to train the staff, all that kind of stuff. There's a lot of moving parts in starting a restaurant, so it's not for everyone. But the key to all these strategies, whatever business strategy, business you want to start or whatever strategy you want to use, you want it to at one point become a passive, something that generates income without you having to deal with it on a daily basis. All these strategies are going to require effort at the beginning to get them set up, but your goal is to basically get that to a certain point and then your hands free, and then it continues to generate income, generate net cash flow. This is a little bit like juggling and stuff like that. I mean, there's just so many balls you can juggle, so many projects you can juggle and keep in the air at the same time. But if I was to assign one person the job of juggling one ball, I could juggle an infinite number of balls because each one is managing that one ball and keeping it in the air. Very easy to juggle one ball. I just have multiple people each juggling their own ball. It doesn't make for very good circus entertainment, but in terms of business, this is where you want to be. You want to basically get them to a certain point where these businesses, these strategies are being run, self-managed, and then you're just looking at it from a strategic perspective and the cash flow. So this is why it's important. One of the first resources that we want to look at when we're looking at which strategy we want to deploy or use to achieve wealth is what kind of time do you have to dedicate to this project. Time is very critical. People have families, they have jobs they want to get away from, and then you want to do all kinds of different things. And but you're going to need to dedicate some time to get this business off the ground. So that's why it's important to pick the right strategy. Not every investment strategy requires the same amount of time. So if you're going to do a commercial or an apartment building with 50 units or 100 units, and it requires value add and it's out of state and etc., it's going to take you a while to figure out what are the rules and regulations out of state, what is the permitting process, the contractor, all of that, the due diligence, is it the right market, what's the market rent there, is there a way to, as you can see, there's a lot of moving parts. There's a lot of balls that you have to juggle in the air, and then in order for that to happen, you can do it, but it takes time to get it done. This is why if you're working full time, you have a family and stuff like that, this is probably not the ideal strategy to get started with. So you could look, if you're interested in apartment buildings, maybe you want to invest in a syndication, where you basically put your money into a pool of fund that owns and operate an apartment building. Or you do turnkey rental, where you put money, you have to buy a single family rental, for example, and it's managed and you don't have to worry about it. The property manager is managing everything. You look at a report once a month and make sure that your money is coming into your bank account. So time is the key resources here for all these things, because the key component here is to get these strategies off the ground requires an amount of time. You have to be willing to dedicate that, and you have to have the availability basically to invest your time in these strategies. The next one is really about capabilities. So this is your personal skills, your personal knowledge, also things that can bring to the table, like either a partner. It could also be something that access to certain type of information. For me personally, like let's say if I look at a commercial medical building, this is not something that I would jump into, even though I have all the time in the world, all the time in the world right now. This is something that if I was really interested in, I could jump into. But I know it would require me a lot of time to figure that out, because I don't have the capabilities right now to do this. I figure that there would be, if I was to go in the commercial medical building space, I would have to know more about some laws and regulations about building codes in the whatever area I decide to go into. I need to find tenants for these. I don't have really a network of medical people to call and say, hey, I opened up a space, come and go there, and then lease from me. So I don't have this network. It's not something that's something that I can easily get into, and it's going to require time. And I know that I don't have the contractors either that can go in there and know the code for medical buildings to get that off the ground. So this is the kind of strategy that I basically avoid. If you have the skills and capabilities, then maybe this is a field that you want to get into, because not too many people can get into that. This additional skill that you have is a barrier to entry for other individuals that may be interested in that space. So that's something that could be interesting for you. And that also means that if you're very familiar with that space, it requires less time for you to get involved in that particular project. So this is something to think about. Another one is access to information. So there was a woman that I spoke to, an investor, and she invested in land. She had access to satellite images, all kinds of very specific kind of information to know that, we think that such and such a company, Tesla, is going to build a massive factory in the middle of nowhere, or that they would build a solar farm, or there would be a line of power lines that's going to come through here, and they're going to need to go through some land. So she would literally invest into what's called the path of progress for these farmland outside, in California, Nevada, and stuff like that. And then for most people, these piece of land had no value because they were basically, you can't do much with them. They're in the desert, in the middle of nowhere. There's almost no roads go to them. So no value for most people, but she had the right information, and then she had the right network to know that this land eventually would become very valuable. And this is how she does her business. So basically, think about the skills that you have, the interest that you have, and also if you're thinking of partnering with other individual, also kind of make sure that they complement the skills that you are lacking, where there's a gap. So that's going to make for a much stronger team. And that's basically what I would say around the capabilities and the skills. So really look at these capabilities and skills that you have to make sure that you have a strong team and that it matches up with your investment strategy. And finally, there's capital, basically money that you need to bring to the table. Money is it's kind of a funny thing. So there are strategies out there. I've talked about wholesaling in the past, where you really don't need that much money to get started. In fact, you technically don't need any money. It's just a question of talking to the right people, finding the right opportunities, get them under contract, and then contacting investors to determine if they're interested in buying the property off of you and paying you an assignment fee. So there's no money in here, it's just a question of signing a document and then assigning that contract to an investor for an assignment fee. Good way to accumulate funds. It requires a lot of time to get that done, but it's possible. Then you have your own money that you can use, obviously, for these projects. So that could limit also the type of properties that you get into. So if a lot of these projects require $1 million to get in there, like commercials or something like that, commercial space, then you don't have that money. That means you have to not use this strategy or have somebody that's going to come in with the money to make that a possibility. There are a lot of additional sources of funds that you can use. Your friends and family, for example, may have, if you have some rich friends, they may want to invest with you. So that, as a private money lender, as a joint venturer, or all kinds of different capacity or equity partner, and then they can basically invest in your project for a share of the profit or interest, so you decide how you want to work. There's also other people that kind of outside your network, accredited investors that you can reach out to that could be interested in investing in your project. Typically, if you have a good idea and it makes a lot of money and you know your numbers and you can talk to you network and you talk to some people, you're going to be able to find the money. That's what we say all the time, is that if you have a good deal, you're going to be able to find the investors that's going to be willing to go in with you. In my book, Stop Trading Your Time for Money, I have created something that's called a strategy quadrant. Basically, on one axis is basically the risk involved, kind of how much capital you have to put into the deal, and what is kind of like the return you can expect, and kind of what could go wrong, and all of that. So kind of what is the expected risk and return of this particular investment. Of course, the amount of money that you have to put in matters in there as well, because you have a more potential for loss. But yeah, so that's what we're looking at. The other axis is about time. So how much time it requires for you to get this particular investment strategy off the ground. So this is something that's also very important, and that you have to pay close attention to. This time also includes it's really about the time to get this investment strategy off the ground, as if you didn't know anything about it. So when you look at my book and you look at this quadrant, I explain every single strategy. And basically, if you're a new investor, highly recommend that you stay to the low risk portion and the low time portion. And that basically means, like the turnkey rental space. That means private money lending, potentially a turnkey apartment building, like maybe the smaller kind of apartment building in well-known areas to you. So that's kind of where you want to be at the beginning. Then the strategy is really to buy back your time Once you have the time, then after that you can go into more aggressive, riskier strategies and things that are all outside your what you currently know in terms of capabilities. So once you've identified the strategy, I recommend that you kind of stay focused on that particular strategy. I've seen so many different new investors that are going to networking event or going to YouTube and then looking at all kinds of other strategies. They say, oh yeah, this is better, or this one I make a better return, or this one. Yes, there are strategies where you're going to make a better return, but it only makes a better return if you execute successfully. And this individual that is sharing, one of their investment strategy, how they made 30% on return on a particular investment, most likely you won't be able to execute to the same level that this individual did, because they have the right skills, they have the right team, they have the time to dedicate, they have the money and all of that. So this is just for you to just stay focused. All these strategies make money. It just comes down to execution. You also want to be financially literate. So learn more about everything around the finance of real estate, of investing. Know your numbers. Understand exactly how it works. If you're looking at a single family rental, again, these numbers are pretty small and they're pretty easy to understand. I mean, you get rent, you get insurance, you get property tax. It's very similar and it's not that difficult to understand. When you go into something that's private money lending or the notes, promissory notes kind of business, it could be a little bit different, especially if you're trying to go and buy or sell partials on a promissory note. What is the value of that and how do you exchange that? And so there's a lot. It could get pretty complicated. Again, stick to your strategy where you have the right skills, times, capabilities, and money, and then it's going to work out. Know the numbers associated with that so that you can easily compare and then know how to measure and plan for success. The other thing is you want to focus. We're talking about wealth here, so the focus is really on capital preservation. So you don't want to take undue risk. There's no need for that. There's plenty of opportunities out there. Just find an opportunity that works well, where it's reasonable. Maybe it's a no-brainer, one of those famous no-brainers. You can still lose money on no-brainers, by the way. Just stay focused and then make sure that you preserve your capital. So if you're doing PML, make sure that you know that you have the right loan to value, so that if the thing kind of like bails out, then you're still able to take control of the property and then take action and sell it or renovate it or finish it, etc. Right? So if whatever strategy you do, make sure that you focus on capital preservation. And the idea behind that is that if you have $100,000 and you lose 10%, you're at $90,000. Your return to get back to $10,000 is going to be more. You're going to have to make 11%, actually a little bit more than 11%, I think, to get back to $100,000. So losing money is worse than making a little bit of money. I'd rather make 2% up than lose 2%, because the next thing is going to be, it's going to take me more return, a higher return, in order to get back to where I was initially. So capital preservation is key. There's no reason to take undue risk. There was a woman that showed me an opportunity in near San Quentin, the famous prison. It was literally at the gate of San Quentin prison, where there's serious criminals out there. And she wanted to invest in that. I said, why take the risk on that? There are other opportunities out there. Finally, find a mentor. This is something that's, it's somebody that you can talk to, and then that can help you with your investment. Make sure you're on track. Thank you for watching. I hope you understand a little bit more about wealth building strategies, and then stay focused and pick on the right one. If you're interested in real estate investment, continue to watch the rest of the videos on my channel, and don't forget to subscribe.